Hello, and welcome to another day of TA the old way, where as usual we are going to assume that markets, like all things that exist, arrange themselves in a fashion that is decent, orderly, and oftentimes mildly predictable. As you can see, we are looking at the Bitcoin chart. I just want to start just by visiting the macro. We're looking at a weekly chart. We have the Heikin-Ashi candles on just to give us a nice visual representation, and I just want to point out a couple things. It's wise to know your environment that you are trading in. There's been a lot of bullish sentiment that I disagree with very strongly. The idea that we are in a raging bull market I find laughable. We are still above the 200 weekly EMA. Price has not had a major catastrophic breakdown as of yet, but as we can see, if we snap this line here, our current price is, well, we're sitting at right at about 26,000. We have this mid-range here, where we obviously have high time frame support flipped into resistance. That's not a good look. That's not a good sign. One thing that we often look at for reversal patterns on small time frames, and it is no different on the large time frames, just larger time frames have a much longer working time range. But if we switch to our regular candles, I just want to point out a couple things on the macro Bitcoin chart that a lot of people are ignoring. Why, I'm not really sure. So now this is just on the regular scale. What I want to do is I want to switch to a log scale. Now the reason for switching to a log scale is very, very simple. When doing technical analysis, we are looking at past price performance versus time. How much has an asset changed in value versus time? And there's a couple things that I want to point out. The purpose of the log scale is this is showing us a visual representation with these candles of not just the change in dollar, but it is showing us the change in percentage of value versus time, rather than just the change in the dollar amount, because let's face it, nobody cares if a $1,000 asset goes up by $1. I mean, we've gone up by, nothing. But if a $1 asset goes up by $1, we've gone up 100%. That is what drives the buying and selling decisions in the market, is the change in percentage of value. How much money have I lost on my investment? Or how much money have I gained on my investment? And what is the rate of increase? And there's something wrong with our current push to the upside. While it has been a very nice, healthy, 100% pump from this bottom, we are at macro resistance. We now have a nice double top at the macro resistance. But looking at this weekly chart, one thing I want to do is I want to pop out to the yearly, and I encourage you to search this out for yourself as a reversal signal. It is something that I use in small time frame trading on a regular basis. And that is, let's say we're on a 5-minute chart or a 1-hour chart or a 1-day chart, whatever it is, the highest bar or the highest candle on the chart in a swing. I mean, we're talking about a swing. So, I mean, looking at, well, before we give the example, let's just do a real-time example. Let's go down to the hourly. We'll get zoomed in here. I'm talking about reversal signals and knowing your environment on the macro scale. Why should we be looking for short trades? I do expect the market to kind of have a push to the upside. I was kind of hopeful that we would have done it already from this level down here. But what I want to talk about is breaking the low of the high bar in a swing, or breaking the high of the low bar or the low candle in a swing. So we have swings here. This is a swing, a minor swing that is part of a larger swing. Swing low, swing high. So if I'm looking at an hourly chart, and this is the candle, I usually use the word bar when I'm talking about bars. This is what I mean. And I typically use bars. Candles offer good information. Really all we need is we've split time and price up into 1 hour increments. All we really need is the high, low, open, and close. I mean, there's not really anything else that we really need. But for a reversal signal that is super common, very effective, I don't suggest using it as your entry, but I mean, a person certainly could. But I like to use it more as a confirmation. I like to enter at certain levels with certain indications that make me feel comfortable entering a trade. But here's the low bar of this swing. So here's the swing high. Price is coming down, and it's failed to put in any higher highs. It's still trending down, and then we had a reversal. We came up and put in a higher high, then a higher low, and then a higher high above all of this. We got a new swing to the upside. Here's our swing to the downside, our swing to the upside. Let's just take even these minor swings. So here is our swing to the downside. Here is our minor swing to the upside. And let's look at the lowest bar in this swing. When we break the high right here of the lowest bar in the swing, that is the indication that price has reversed. Oftentimes, it'll occur as an engulfing candle, which is also a very common signal. Or how about this right here, this minor swing? This is the highest bar as price is moving up. This was the highest bar until we broke it. Now we're in a new swing. We broke the high of the lowest bar in our past swing, so now we're starting a new swing. We have no idea how far it's going to go, but when should we expect it to reverse? Well, we just keep looking at each of these bars, or if we switch back to candles, there's no different. We're just looking at the high and low. Here's the low of the candle. Here's the high of the candle. Right here, we broke the high of this candle, confirming the swing had changed, or this swing had ended. And now we've started this new swing, and we see this here is the highest bar in the swing when we broke the low of the high bar. That was a reversal signal. And then what happened? Price came down. We didn't really put in any higher candles since this. And then what do we have here? We have, so this here is still the lowest bar. We haven't, so this would be the high of the low bar. We could mark this out on our chart and just say, okay, we're just tracking the swings. This swing ended right here. This swing ended right here because this was the low. This candle came down and broke the low of the high bar. So now we're just keeping track of each of these candles as we move down. And then what do we have? None of these subsequent candles broke the high of the lowest bar. Well, then this bar here came a little bit lower. So now this becomes the lowest bar of this little swing. And what happened? Price broke the low of the high bar and it pushed up, but it sold off. It's part of a larger swing. And then here's so this little swing ended where? Right here at the break of the low of the high bar. We pushed up. This is now our highest bar. So this is the low, and when price broke below the low of the high bar, we get this swing going down. Now we can do the same thing on the larger swing. We can say, okay, this here is a larger swing. Here we've broke the high of the low bar. Same thing here, and then we get this pullback. But we can use this as reversal signals of these swings inside the market, And you can see each time, let's look here. Here's the high bar. Here is the low of the high bar. Price came down, it came back up, and then we broke the low of the high bar. So now we've started a new swing to the downside. I mean, none of this price action exists. We're only at this candle right here. So when is this downtrend confirmed to have changed? Well, we would be going bar by bar or candle by candle as it moves along and saying, okay, here is, and I suggest using a higher time frame and trading, off a smaller time frame. But here is the low bar, and here's the high of the lowest bar. Did it get broke here? No. Still hasn't been broken, still hasn't been broken. This is still the lowest bar on this swing, and we are looking for the high of it to get broken as a trend confirmation reversal signal. Well, as we get out here, we broke the low of the low bar, so now at this point, this candle becomes the lowest bar. We move into this one, so this would be our next point where we would say that if price breaks above, there's a reversal until this candle printed, which was lower than this one. This candle did not go lower than this one, but this candle did. And then, so we would take our lowest candle, we would say, okay, what is the high of our lowest candle? And what happened? Price came up right here, it wicked above the low of the high bar. And then we consolidated a little bit, and we had a push to the upside. We never broke this low still, until we get out here. And then price came up here, and what is our highest bar? I mean, this doesn't work all the time, but it has a very high success rate of being a good, solid reversal signal. Is when you're in an uptrend, whatever the highest bar in your chart is, I mean, I suggest using a daily chart in all seriousness for those figures, breaking the high and the low bar, or else at least a 4-hour. I mean, the 4 hour is probably one of the strongest time frames that a person can use for projections. But breaking the low of the high bar is a reversal signal, and breaking the high of the low bar in a downtrend is a reversal signal. So let's go out in our macro projection. Let's go out to a yearly chart. Here we're on 12-month chart. It's a yearly chart, and we're going to see something on here for the first time that's never occurred. If we go back here, this here is the there's past price action that's not showing up on Coinbase, but if we look, here's our high bar. Did we break the low? No. Here's this high bar. Did we break the low on the yearly? No. Look at this tiny little yearly candle when we put in our 69K top, 68K. Possibly a forever top, by the way. I mean, I don't know if I completely subscribe to that, but very well could be true. What do we have? This is the highest bar on the chart, and we broke the low of the high bar on a yearly chart, giving us a reversal signal on a super mega macro level. And let's pull up the weekly. Well, let's just go to the monthly. We'll just work our way down. We'll just try to do it quickly so the video doesn't drag on for a decade. So now we're on a monthly. Let's look at it again. Let's look at the highest bar. Here's the low bar. We broke the high of the low bar. Where did we break it? Right here when we reversed. We came up and retested it on this monthly candle. We broke it. The price never came back down and visited it again. Here's this high bar. Did this candle break the low of the high bar? Looks pretty even. I mean, might just wick down. I mean, a few ticks below, but I mean, pretty solid. Looks like a pretty solid double bottom to me, and not even a very serious break of that low at all. But as we move our way up, the highest bar, we're looking to break the low of the high bar, unbroken. Here is the highest bar. Again, we kind of came down and put in the double bottom, maybe just a quick little wick below. I mean, if price comes down and just wicks back up, it you know, and doesn't really close down there. I mean, we could look at a line chart also, just looking at you know, the close prices, and you see, I mean, it's just solid uptrend. But let's go back to our candle chart here. Here we have the highest bar. We broke the low of the high bar and started this downswing. And as we get down here, you know, as we're moving down, we're looking at the lowest bar. Here's the high of it. You know, we double topped on it, but didn't break it. This is still the low bar, this pin bar, all the way until we get to this big God candle going down, and then mega dump. This is now the low bar. This is the high of the low bar until a month later we put in this bar. So now this is the high of the low bar, and look at what happened when we broke it. The high of the low bar in the monthly was our accumulation range down here, and we broke it. We started in uptrend. So now this is the highest bar, and as we moved up, we never broke below the low of the high bar. This is the low of the high bar. Price started coming down. We have no confirmed downtrend yet, because really we're just kind of rounding over to the upside until we get to, you know, this one candle here. We broke the low of the high bar. We had a little push to the upside. We have this was confirming that we were in some kind of a downtrend. We pushed up to 50% of this swing, just a 50% retrace, and then now this is the highest bar of this swing. Here's the low bar. We broke the high of the low bar. This is the highest bar. We broke the low of the highest bar, pushed down. This is now the lowest bar. We broke the high. We pushed to the upside. I mean, there's a few times where, I mean, it fails, but I just want to point out that that is a reversal signal that is used by a lot of traders. You're welcome to seek it out. It's a very normal thing. And if we look at the tops of our previous bull runs, we don't have them all on here. They're all blow-off tops. Blow-off top. Here, we didn't get a blow-off top. We got a double top. And if we pull up our oscillators on the monthly, we have divergence from this swing high, you know, bull run high, swing high, macro swing high, to this macro swing high. We have divergence. And what did we get? We got a double top for the first time. That is an extremely bearish signal on the Bitcoin chart. And another thing I want to point out about our current rally, the rate of increase of time versus price, you know, how much time has passed to get this 100% increase. You know, we can just draw a line here and bring it back. I mean, this is weak, super weak. I mean, you know, it's about the same rate as this right here, but I mean, the real low was down here. This was our real rate of increase, not this weak, limp D rate of increase here. I mean, this is slow price action. 100% is very nice, but comparatively speaking, it even this little pump here went up way faster. It you know, even in our downtrend, let's go from swing low to swing high. I mean, this one here is more at this rate, not this rate. So this has actually been a very slow price rise. So what I'm pointing out here is our macro, mega macro environment. The all-time history of Bitcoin has been extremely bullish, and as you know, some of the most profitable traders that ever lived, like Degen, you know, when the shoe shine can predict the next bull run, it won't happen. At this point, a 3-year-old could predict the halving cycle bull run on the Bitcoin chart. It's happened 3 times already. You know, a lot of times things, you know, a cycle only repeats 3 times. This may be the forever top on the Bitcoin chart. I'm not saying that is the case, but I'm saying it is certainly a possibility. We have all kinds of signals that are telling us that there may be a top in on Bitcoin. You know, maybe it's a local top, and a few years from now, maybe we, you know, break the top and get up into the 100K. Maybe we just do a little pullback and we just run. I don't think anybody can really know that for sure. And I want to point out something else here. I mean, if we just draw a simple trend line here coming across these lows, we have broken trend, and we have just retested the trend. I mean, if you are a serious trader with more than a few brain cells, I mean, and you've done some research over time, what is the exit signal? Break of trend. The trend broke. We came down, retested the trend, mega drop. Here's an uptrend. The trend broke, came down, retested, drop. This is a minor trend, so you got a minor drop. It is just the way it works. When price stops trending, sentiment changes. So there is a lot of mega macro bearish signals on Bitcoin. Bitcoin has never seen a bear market. These are bear trends. This chart has done nothing from its inception besides go up and to the right. It's never put in these larger swings and these bull runs and, bear market, whatever. It has never put in a lower low. It's just never happened, Now we have a macro double top. Every other top before was a blow off top. Macro double top, monthly divergence. We have a yearly candle that has broken the low of the high bar. We just go back and look at that. You just can't ignore these things on the chart. I mean, does that mean that is exactly what's going to play out? No. But I want you to look at this candle and try to lie to yourself and tell yourself that this is not an engulfing candle and see if it proves true. This is an engulfing candle to the downside, not the upside. This is an engulfing candle. The next candle was to the upside. Right here, it just boom, took that whole thing out. This is an engulfing candle to the downside. And going back to the weekly, my goal in this stream is to not be the biggest bear of the century and say that Bitcoin's going to zero. I mean, we're going back to 3K, whatever. It is to try to poke holes in the raging bull market argument that is perpetrated on YouTube because people put their life savings into this stuff that are hard-working men and women who have lives and families. They have livelihoods. People sell their 401ks because they listen to all of the conjecture on YouTube. I prefer to listen to zero. The chart is the final culmination of all buying and selling decisions. Any and every decision a person has ever made that is in a position to move this market is on this chart. And what this chart is telling us, let's also look at the money flow on the weekly. Look at the high of this green wave. That's the money flow. Look at the high of this wave. Price went higher, but less money came in to push it up there. That means there's just a larger player, larger holders are doing more of the work. Well, when larger holders decide to exit the market, well, they are going to, equally bring larger moves to the downside. So what do we have? We have all previous blow-off tops. This time we have a double top. We have a yearly engulfing candle that has broken the low of the high bar. We have a very clear uptrend that has broken trend. I mean, we're talking about bull run trends here. We're not talking about just this little uptrend right here. Here we had an uptrend or a downtrend. Its price is trending down. We broke trend and price pumped. This is a bull or a bear run, we'll say. Here's the bull run trend. You could draw a line, it broke, and then now we went into the bear trend. Let's go over to this one. Here's our downtrend. We're talking about macro swings here. Let's just look at it. You can tell this market's saturated with traders because what happened? Price came down. We broke this macro downtrend. We retested the trend and pushed up. Let's just look at these smaller trends. Price came down. It broke trend, came back, retested the trend, and pushed up. I mean, the same thing happens to the downside, folks. I mean, it is literally just that simple. You know, here you got a raging bull run. This limp, weak, limp D run. Look at the curvature of this. And then let's look at our oscillator down here on our current run. Higher high, lower high. Here, let's match it up with the price action. We got a high and a higher high on the price, lower high on the oscillator. We have divergence on the money flow. We have these waves. I mean, people look at these wave trends, you know, like Market Cipher. This is Market Liberator. There's the Fu Manchu on TradingView. All these blue waves are just RSIs. I mean, we could just pull up the regular old Joe Relative Strength Index, and these peaks and valleys are going to be in the same spot. This is just a smoothed out version of the RSI. So what can we use this for? We can use it for overbought, oversold. We can use it for divergence. And it's just a multi-indicator because somebody who was very successful using the RSI and was using it to look at being oversold, overbought. I mean, the reason you get these dots is because they have two RSIs that are just really the same indicator. It's just they're offset. One's looking back 14 and the other one's looking back like 10 or 15 or 8. And when they cross, it gives a little dot. I mean, I give almost no stock to these dots. I care less about those. I use these wave trend indicators like Market Cipher and the Fu Manchu and Market Liberator the same way I use the RSI. These blue waves, that's all they are. It's just a smoothed out RSI. I look at the curvature of the momentum. I look at oversold, overbought, and I look at divergence. The same thing I use a regular RSI for. It's just easier to see here. And these dots kind of help you follow the tips of it. I mean, that's about it. But they've also overlaid a money flow indicator on here. It's a smoothed out version of the chalk and money flow. Same thing. And what do we have here? What do you look for on the chalk and money flow? Is price going down while the money flow is rising? That is divergence. That's telling you that you're likely to see a reversal. Is the money flow going down and prices going up? I mean, that's divergence. That's a reversal signal. Look at this wave on the money flow. Way higher. Look at the price. Way lower. Between here, this point, this price point, they match up just fine. We move over here to this high, the real high. This is the confirmation high. What do we have? We have a lower wave on the money flow. We have lower wave on the RSI. That is divergence. And we're not talking about divergence just in this little swing. We're talking about divergence from bull run to bull run. I'm going to say bull trend because I think Bitcoin has been in a bull run since its inception. It's never put in a lower low to change the trend. So what do I expect here? I mean, what happens when you see a trend reversal? Price comes down, it breaks trend, it ranges, accumulates, and then you get an uptrend. The high is in, it will range sideways, break the trend, and then go to the downside. It will start to range sideways, break the downtrend, and then rotate to the upside. We don't know how far a swing will go. We can make projections, but the main goal of this stream is to just point out what is on this chart that blind eyes just don't want to see because everybody wants to make life-changing wealth. It is extremely normal. And being that millions of people have probably made life-changing wealth in the uprise of Bitcoin. Why would a normal, rational human not want to get in on it? And then I hear things about the BlackRock ETF is going to boom the price. BlackRock was calling Bitcoin way back here when Bitcoin was at $3,000 down in these areas, was calling it, criminal money. But circulating documents saying that people should be holding it in their portfolio. I mean, if you are trying to accumulate, you don't want the price to pump up. You don't want the price to go up. If you're accumulating Bitcoin for an ETF, do you want the price to go up? so that you have to pay more for the goods you want to sell. No. If you own a grocery store, you're not going to try to create a situation that's going to raise the price of your goods that you're going to sell in your store. You're just going to have to pay more for the goods and then turn that extra cost over to your customers, who are going to be less likely to buy because the price is now higher. So when was BlackRock buying and accumulating Bitcoin? Probably when they were calling it, criminal money, criminal internet money. And then now we have rich men advertising on TV how wonderful Bitcoin is when they know it's going to take months, if not a year, to get their ETF approved, if they even get it approved at all. And what are they doing? They're probably offloading their Bitcoin. And when do they magically call it criminal money? At a clear bottom. We had a clear capitulation. We started to range sideways, not this choppy lady slipper kind of curvature to the downside that had an opportunity to break to the upside, but it didn't. It rejected, came down, and then they're accumulating. It's criminal money. They're accumulating. It's criminal money. And then, now we've come down and we're coming up. We broke the macro uptrend. When should we offload? When the general sentiment is this trend. It has slowed significantly. And if we looked at the all-time chart, this is rounding over at a rate, of diminishing returns, where now we can expect this is our macro uptrend. We've started to range sideways. We didn't just get this nice big 85% drop that Bitcoin always does. We got a double top causing us to range sideways for twice as long. Then we got our drop that didn't come down 85% as usual. And we've broken trend. And, now we're retesting the trend. And we are going to most likely drop. Has price broken above the 200 EMA? Yes, it has. And just like here, price broke below the 200 EMA. And if you look on your smaller time frames when you're trading, is it respected oftentimes? Yes, it is. But is it respected all the time? No. There's plenty of times where price breaks above it, one deviation above, and then, just quickly comes back down. On this macro chart, looking at 13-year period, Bitcoin's not brand new, by the way. It's not scarce either. Somebody could make a brand new cryptographic style blockchain, totally decentralized, burn the keys, program tomorrow, that you can transfer your wealth around and move your wealth around at lightning speed. Crypto's wonderful. It works great. It functions good. It's totally autonomous, trustless. All of those things are true. But is crypto scarce? The real use case for crypto. Is Bitcoin getting scarcer? Yes, it is. But is Bitcoin the only cryptographic currency? No, it's not. There's thousands of them. Is Bitcoin well-designed software? No, it's not. It's old, ancient, 13-year-old spaghetti code. It's had inflation bugs and it's had some issues. Is it bad? No, I don't think so. Will it become a store of value? I do think so. I do. It's a first mover in its industry, and it will probably hold the chief slot for a long time. Can Bitcoin ever be used as a payment processor for everybody and their brother to buy and sell based off of Bitcoin? There's not enough throughput to do it. Nobody's going to wait days for a transaction to come through. It's ridiculous, especially when there's other things. You could just take XLM, seconds. What's the fee? Minuscule. So, most of these arguments for Bitcoin I find to be ridiculous. The use case argument is spot on the money. So what I want to look at here is I want to look at a couple things. If we just follow this downtrend down, so how low is Bitcoin going to go? That's a very good question. Nobody really knows, but, if we look at these swings, here's our swing high, here's our swing low, this is just an intermediate, minor trend in between here. Here's our swing high, and this here is possibly our swing low, but this could be a intermediary swing low, just like this is a kind of a minor swing high here. This is just a minor swing inside this larger swing. If the first thing I want to do is I just want to pull a measured move. Let's go from the high. Now let's bring it to our top, and where does that bring us out to? 7K. Not a very pretty price. Let's pull up our fixed range volume profile. Our point of control, is awfully very, very close. So let's say that only 75% of this measured move pulls out. Usually, you get 100%. But markets move in ranges, and these ranges, if you're on a log scale, not on the regular scale, you got to be on a log scale. They move in ranges that are the same size. It's the same people trading the same stuff. It is provable beyond any reasonable doubt by just looking at your chart. Let's take this little price range. I just drew a box around it, and then now let's move it up one. Oh, it's the same size. Imagine that. Let's take our larger macro swing up here. Let's take this range. Let's pull her down to the bottom. Oh, wow. You couldn't make it up if you tried. Now let's take this more macro size range and let's start playing with it. Oh, wow, look at that. How come that's not on the YouTube boys channels that are telling you that it's going to 100K? There's motivational interest, and at the end of the day, I like money, but I could care less. The creator God that made all things owns the cattle on 1,000 hills and will take very good care of myself, my wife, and my children. Oh, look at the size of that range. I couldn't make it up if I tried. Here we're just looking at the close prices, but look at from this wick to right here. Oh, markets move in ranges, and these ranges are you got macro ranges, you got mid macro ranges, and then you got small time frame ranges. If you're going to trade Bitcoin, you need to know your environment, and your environment is to the downside. Currently at least. Then even in the more local time frame, when did I switch to shorting Bitcoin after this nice bull trend here? Well, I'm on a log scale. I got a trend here. Let's look at the price chart. So, here we have price coming up. It's trending. Hit the trend. Boom. Hit the trend. Boom. What do we got here? Macro resistance. What do we have here? We have equal size ranges. Here's our top price range. I'm just going to grab it roughly. Just grab it, copy and paste it. Well, we're just going to drag it. So we came down one full deviation. Here's the top range. We came down one full deviation. Why would a person expect this to be a bottom? And here's another thing, too, that the world doesn't want to acknowledge. When you're in an uptrend, you don't want to break structure. On small time frames, if you're a scalper, swing trader, I don't care what it is, if you break structure, that is the signal to get out on the next pullback. Look at this. Here's the last bull run high. What did we do? We broke structure. And why do these signals work for reversals? It's because it's telling you about the past buying history of the market, how much liquidity and how much buyers is available. Price didn't push up as far as it did this time. So when it did its pullback, when it pulled back here, price had pushed up so far, there's no way you'd get a break of structure. Well, here, price didn't push up that far, and we got a double top. So when it pulls back, not even its normal 85%. What do you get? You get a break of structure. That is telling you that there's less buyers available, and there's less capital available to be thrown at this market, or at least that people are willing to throw at the market. It's telling you that the sentiment and momentum towards your asset, I mean, I don't care if it's tulips, Bitcoin, pencils, whatever it is, that it is slowing. So here we took one deviation. This was not a hard bottom to call. You know, and what do we do to get projected areas? Here's our range right here. Well, where's price going to reverse? Either one deviation, it could be a half a deviation, and it could be a quarter. Markets tend to move in eighths. I mean, I don't pay attention to the eighth. I like to pay attention to the quarters. So now let's look at it. Look at what happened to our price. We came one full deviation down. Where's 50% of the range? Let's delete some of these other lines. Let's snap a line at 50% of our average true range here on the mega macro. Let's see if we have any confluence. Oh, it was resistance, flip to support. Look at that. Let's go to 75% of our range. Oh, man, I mean, you just couldn't make it up if you tried. It broke up to the top of the range and found support at 75%, And then what are we doing now? We broke below it. That's the signal that the trend is over. Price came back up and confirmed this resistance level. You got divergence on your RSI. The money flow is about to cross over into the zero, but let's just draw a trend on the money flow. I mean, it's going down. Oh boy. So what will we probably see here? A little blip into the green of the money flow while price jockeys around here in ranges, and then we will probably get another lower green wave on the money flow and come down, or maybe we just reject at the zero line. Oftentimes the reversal. Let's just do it. Let's take this red money flow wave, and what happens when it hits the zero line? Oh, it was the top of the swing. Damn. I mean, what happens when it hits the zero line? It's the top of the swing. We broke trend. Look at that. Wow. I went short on July 1st. Why? And that was against, everybody and their brother, and received 9,000 nasty messages. I could care less. If I'd been watching the news, I'd be longing to $1 million. If I'd been listening to YouTubers, I'm an idiot. Well, apparently, on July 1st, here's July 10th, we're looking at a weekly, you couldn't get any closer to the top. And why, though? Divergence on high time frames. We have our trend here. We have our range. We broke up to the top of the range to resistance. When we pulled back, we didn't hold this 70 for this quarter of a range. We didn't hold it. We broke down, and yes, we got a bullish pump. I expected a bullish pump, but I don't expect it to do any serious damage to this high level because of, how little price has increased over time. The rate of increase is nothing compared to these runs. We went up in percentage-wise way more, way faster every other time than this raging bull market that we're in right here. It's a joke. And people, they listen to this stuff on the internet, and maybe I'm wrong. And I don't think you should just listen to the words of my mouth. You should listen to the content of my speech and make a decision for yourself based off of what you have learned about how markets work, and stop listening to where people say the market is going to go to and what's going on in the market. Learn the trading concepts, and then look at the chart. And just like, if you're in church and you learn your Bible, you learn what the Lord says,
And when the preacher starts preaching something totally different, and the Bible says the sky is blue and the preacher says the sky is red, it's time to deviate from the person giving you information because they are wrong. It doesn't line up with logical, just normal, what you know to be true about how markets work. So, I mean, don't listen to the words of my mouth, but give stock to the content of my speech if you are longing this market with your family's life savings, because it will wreck you and it will destroy you, and you will be a very sad person afterwards. And now that we've talked about our environment, I want to give some, you know, high potential areas as to what we could see go on with the price action. Believe it or not, I'm looking for a little bit of a price pump. Being apparently the macro bear of the century. Why am I looking for a price pump? Well, we broke trend. Have we retested it yet? No, hasn't happened yet. Are we mega macro bearish? In a downtrend? Sure we are. Yeah. It was it worth shorting this in an uptrend? Sure it was. Was it worth shorting this? Yeah, I shorted this. I didn't even short this right here because I don't know what's going to happen when it got to this trend line. Is it going to bounce or is it going to dump? A lot of people are trying to catch this big dump. This was the short trade right here, July 1st. And if you go to our CryptoFile 622 ideas page on TradingView, and I suggest you subscribe to it, we ask for no money. We have a totally free Discord where I'm spending 1 to 3 hours a day at 8 p.m. U.S. Central going over my current trading plans and teaching people how to not get screwed by kook pottery foolishness spread on the internet, and just teaching straight up trading concepts, just how markets behave, and how there are some things you can look at that do give you indications as to what is going on with your asset. And being that, like playing a game of chess, there's only so many moves on the board based off of what's available. Price isn't going to just drop down. It's not going to just pump to 100K. There's not enough money available. There's not enough willing sellers to crash the price like that. But I mean, what can we look at locally? Well, on our smaller time frames like the daily, you keep hearing people on the internet. I've gotten 100 messages. Well, not 100, but I've gotten enough from some real pencil neck douchebags that about how stupid you are. Oh, we haven't been so oversold since COVID, and blah. If we don't pump from right here, it's going to be the first time ever. I think they're going to get their pump. I agree with them that yes, on the daily and on down, we are more oversold than we have been in a long time. Sure. So should price pump? Yeah, of course, I'm with you. I mean, look at it. Do we have any bullish divergence here yet? No. There's not a. Is there a super clear reversal signal? Let's look at the high bar or the low bar. What is going to keep us locked in a downtrend? Look at this bar. Where's the high of this bar? Way up here. Our past support level. Have we retested this mega macro uptrend that we broke right here? No, we haven't. Do we have one of the lowest oversold RSIs? Yeah, we do. So we should see a very healthy price pump. Hey, I'm ready to long the market. From where? I guess I'm not exactly sure. But what I don't expect is I don't expect to break this high and put in a higher high. I expect to pump up somewhere in the 28 to 28.5 area. Here's resistance, came down to the macro uptrend, pumped, come down. It was our support level. It's the same level at which we broke this trend. So this is a support and resistance flip. Have we retested this as resistance since we broke below it? No. Have we retested this uptrend? Also a big no. I mean, we're below the 200 EMA. I mean, man, maybe Bitcoin's so screwed we don't get a retest. And hey, I'm gonna say exactly like what the gainsayers say. That's never happened before. You always get a retest. Where would that bring us if we just took a measured move, A, B, C? I mean, that brings us down to here, and then maybe we put in a lower wave on the oscillator, or a higher low on the oscillator. We print a green dot like right here instead of way down here, but price is lower. We get some divergence. Or maybe we come up here and we put in this is a macro, I'm going to say a minor macro uptrend. So we come up and you range sideways until you break trend, and then you start coming down. Same thing back here. Same thing with every trend. But we are extremely oversold, we haven't retested this trend, we haven't retested this support and resistance flip, we have not put in a lower low yet. I see price possibly taking a little dip and then coming back up and possibly putting in a right shoulder, for a reverse head and shoulders. If we're thinking on a yearly basis that we are going to see some serious downside, and that maybe 69K is the forever top, it's not going to happen. It's not going to happen overnight. It's not going to happen quick. It's not going to happen fast until it is so blunt obvious that that's the environment that the entire herd jumps on board. Now you got a few people like Capo out there. You got Crypto Face out there calling it the forever top. I mean, the dude's been one of the top traders, in the YouTube, Bitcoin, crypto field, since it's been a thing. Give him some respect for his analysis. He might not be the cleanest specimen under the sun. It may be a little avant-garde, little brash, but he's doing a lot better than 95%. He says it's the forever top. And for now, I'm with him. I think BlackRock is looking to offload, get everybody and their brother to buy so they can offload their big load and push the price back down so they can reload for the ETF. And what is my target? 8 to 10K. I mean, it's a sad target. And hey, if this is the yearly engulfing candle, broke the low of the high bar in the yearly, monthly divergence on the wave trend in the money flow, we might even come down, and man, would she be bad. A, B, C, that's 3 waves. 4 waves. Oh, shoot. Break the low. And finally, go in to the first bear market that Bitcoin has ever seen. When you've had 1,000,000% pump, or 60 million percent, 69 million percent, an 85% dump is not a bear market. I mean, it's a fly on the wall. It's nothing. Once prices, once we have our first bear market and we come up and put in a high and start to range and get, a good value of Bitcoin, well, then it's a different story. This is all price discovery speculation. Now let's take our measure. Here's our measured move. So what is the measured move? Why does the measured move work? Because price moves in ranges of equal percentage values. I mean, it just the way she works. So let's take our measured move. You can take your downtrend. Now let's just move it over here. Now let's take our white box range here. Being that markets, W.D. Gann wrote this in a book about 100 years ago also. This isn't brand new business. It's not like I came up with this yesterday. It's foolishry, kook pottery that people came up with yesterday that everybody put so much stock into. And they're failing left and right. I mean, imagine that. I mean, look at this. We take this range and add it down, it matches with our measured move. So where are our big sticking points in price? Well, let's split this range into quarters. Gann said that markets move in eighths, and he's not wrong because they do. And we're going to look at our past price action. Oh, resistance. Now let's go to the 50% mark. Is that another line? Oh, look at that. Resistance, support. It's probably the POC of this range here. Now let's go to the 75% point. I'm just eyeballing this out, it's not going to happen to the penny. I mean, maybe it does. I guess I've never actually taken the time to look because it's unnecessary. So now we've taken this range here. We're going to duplicate it to the downside. We get a full measured move. What happened when we came down one full deviation of this top range up here? We drew a box around this macro double top range. We pasted it below, and price filled it in and came all the way back up and tested it. Elliott wave theory has probably cost the world more money than anything else and is the biggest joke I've ever heard of in my life. All Elliott said was price tends to move in 5-wave structures in an impulsive uptrend. There's 1, 2, 3, 4, 5. And all he said is that you shouldn't break structure. You shouldn't break below here. Not like we did on the bull run here. This low has broken structure. And, here's our next structure. So you got 1, 2, 3, 4, 5. And then you get you break structure, telling you it's a downtrend. Retest that structure. B, this is what forms your head and shoulders. C, now we don't know exactly, where this is going to end or whatever. But that does happen in the market. But all this other blah blah stuff that people have invented, anything past price tends to move. And when it's impulsive, you tend to get 3 waves of impulse. And then you will see you get 5 waves. 3 waves in the direction of the impulse. 1, 2, 3. There's 1, 2, 3, 4, 5, including the pullbacks. All Elliott said was price tends to move in 5-wave structures. And then you see a 3-wave pullback. A, B, C. I view the market solely in ABCs. A, B, C. Because they're measured moves. This move was a measured move. You could take... there's just so many examples of, how markets, you're not going to see it unless you're on a log scale. If you're on a small time frame, the log scale is exactly the same. Look at the measured move. Did I make it up or is it on your chart? There it is, right there. A, B, C, Then we came back up and retested it, put in our 5th wave. And what did we get? We got a 1, 2, 3, 4, 5. Price impulsively moved in the direction of the trend in a 5-wave structure. And what have we got to the upside? Did this break through and start making new all-time highs? We wicked above it a couple times. But no, it didn't. It stopped at the same level. What do we got? A, B, C. Oh, wow, look at that. If we pulled up a monthly chart, this one probably wouldn't even exist. Price went up. There's 1, 2, 3. So we got 1, 2, 3, 4, 5. 1, 2, 3. And this was the top. That is all Elliott ever said, and anything past that is retarded. It's not worth your time learning. It's going to confuse you and cost you more money than anything else in the whole trading business. It's probably lost people more money than scams. All of the foolishness that people have taught about the Elliott wave theory. It's ridiculous. Does price tend to move in 5 waves in an impulsive fashion and then pull back in 3 waves? Of course it does. But Elliott waivers, what would they make of this? I have no idea. And all their silly rules. That's why you could ask 5 different people who trade Elliott wave and they'll give you 5 different answers. But let's consider this now. Let's say that this is the forever top. We have A. We took this range. We got a full deviation down. We got our 3-wave structure to the upside here. We got 5 waves down, 3 waves up. Okay, and it rejected. It didn't break through. It didn't consolidate, or none of that business yet. It's just gone down. Now, A, B, we could be seeing just an ABC correction. Let's take our measured move. that work because markets move in ranges of equal proportion. That brings us down to the bottom of our range. Well, what happened when we reached the bottom of this range? Well, we retraced to the top, but we didn't break structure. This was our A, B, C here. This is the macro upper range. Did we break out of it? No. Sometimes the price will break about a quarter of the way up if it's bullish, and then pull back and retest the bottom of the range, and then that's how you know you got a continuation. So price, I expect price to come down to a quarter range below this low, come back up and retest it. Maybe wick in here just a smidge, but just come right back down within a couple days, maybe a week. Same thing up here. We kind of danced around for about a month, kind of pecking away at the 32K sell wall. This will become a new sell wall, and we'll probably come down and peck away at it a little bit. But when we don't officially break structure, we're not closing high time frames up in here, and retesting it and then getting a bullish engulfing candle to the upside. That's something different. But here's one, two, three. Now here's our range right here. Let's take this rate here. I don't know if it'll be the same rate versus time, so we're just ignoring the time factor here just to get a price level. We follow this right here. This is going to, I'm going to go from the actual point there. So now, well, I'm not drawing these exactly by any means. And it's oftentimes better to do this on a line chart where you don't have wicks. You can see the levels very clearly. The close prices are just as accurate as the wicks. The close prices is what big money's going off of, and the wicks is just retail getting wrecked, on the reversal. But, same concept. Who cares? A, B, C, 1, 2, 3, 4. Now let's take this wave, let's copy and paste it over. Will this give us a lower low? I don't think it will. I think it's going to be awfully close to our other lows. So let's snap a line here, which is why, I'm not saying Bitcoin's going to zero. This, technically wouldn't even be a lower low. That would put Bitcoin with all these super bearish signals, just like we're on a 5-minute time frame. You start looking for sideways distribution and break of trend. It's time to get out. What do you have on this chart on a macro level? Price could come down to $4,000, folks. Will it come down to $4,000? Well, I guess I have no idea. Who knows? Can it come down to $4,000? Abso-freaking-lutely. And anybody that says it's never going under 30K again, well, they were wrong every single time. It's never going to go under 15K again. Well, they'll probably be wrong. Oh, it could never. Oh my goodness. Well, they might be wrong. You have no idea, and I'm giving a strong warning that you don't YOLO. Leverage up your family's money into a market that is loaded with signals. And let's play the other game. Let's say that Bitcoin is only going to just do a little pullback here. And, we're going to see some nice rallies on the way down here. Don't get me wrong. Look at this downtrend. Nice rally. Boom. Nice rally. Actually, there's 3 nice rallies here in this one nice rally. One nice rally with 3 very nice rallies inside it. This is a nice rally. Nice increase, nice gains. 20% ain't enough. 25%, of course it is. People aren't satisfied with 100% increase. It makes the stock market look like chump change. That's because they're trying to become billionaires off of $100. That's just not, it's not the way it works. So should we expect some nice rallies? And we might see a nice right shoulder here come up and retest this trend, retest this level here. Maybe we come down and take out this low to confirm that we are in a downtrend. We come down, make it all the way down to 24K or so. It's a nice psychological level, and just wick down below it. Here we got this low. We come down and we've got this big wick here from our last drop that I didn't even trade. It would have been nice to trade. I had a very small position on it. I took this drop right here, and it took forever because this here I found to be far more likely and far more predictable than what was going to happen at the main macro uptrend. This could have bounced and went up. I didn't expect it to because of divergence, but what I do expect now is we got this big wick. We come down, and fill that wick in, retest this range that we just made, and then come down and wick below this low, get a big nasty wick down and wick right back up, rotate to the upside. All this could happen in a matter of a day. If we look at our main macro uptrend here and we're looking for a retest of it, but we can't put in a higher high because we're in a downtrend. That's right here. We'd have to break 30K. So how long do we have for some price action to actually occur? And just to visually, this is hard to wrap the mind around, and it's good to visualize this on your chart. So let's just take today, the current day. I'm on our current bar, and let's move to where this uptrend to retest this meets this 30K, which would also be a nice right shoulder area. I'm not saying we're going to put in a right shoulder. We got all this time. We got all the way until September 4th. That's 9 days. Let's look at what's happened in 9 days before. Oh boy. Look at all that price rise. Let's look at what's happened in 9 days. Look at all that price dump. Look at what's happened in 9-10 days. Oh, nice price dump. Look at what happened in 9-10 days. Nice mega price dump. Could we come down and wick down like today or tomorrow, take out this low right here? Maybe we don't even do that. Maybe we just rotate up from where we're at and don't break this wick low. Come up, fill our gap in, retest our level here. I'm really only looking to come up to 28.5, 29K at the most. But we could end up way up here at 30K. Everybody and their brother would be mega bullish again. And they're going to get wrecked again because we broke trend. And every single time that we broke one of these trends, we get big giant drops. Here the trend was coming up, it broke trend. How far did we go down? 50%. 50% is about the average. Some of them are 80%. The lowest is 30. When you break a macro uptrend, the lowest on all history is 30% drop. The highest is about 85% with an average of about 50. And a lot of them are about 50%, which is why I'm calling for a 50% slash across the board. And then you'll see a nice, accumulation of probably a weaker uptrend, and then, move on. And let's say we got a 50% drop from this break of trend. Let's pull her down. Oh, man, it's just below the low. You couldn't, if we just went to even 56%, we get to a quarter of our range. Big rally going to happen, Yeah, right. We'll probably come down and get some very, I think we're going to get a nice rally here. Get a nice right shoulder that's put in, and then come on down, or else we're going to get some very violent price drops. But what levels should we be expecting price to rally at on its way down? 50% of the range. Let's slide this down just a little bit. 75% of the range. Well, it's actually probably more about right there. If we just, when I'm saying 50 and 75%, this is the, so it'd be, so we would take half of the range, just split it in half. And what is that? It has become our resistance level, you couldn't make it up if you tried. So you gotta follow the trend of the market. So where should we expect some kind of a rally, So I expect next time price comes down, our next major drop, to come down and break through this low and come up and retest it and consolidate. Just like this was, our support right here. We've broken below it. Now we're retesting it. We don't have to come up here and put this right shoulder in. We can just soar on down. But there is a reason why I'm looking for a price pump. Let's look at our oscillator. We've already had a very nice rotation to the downside. We didn't just start going down at this big drop up here. We've been downtrending for a month and a half. I went short on July 1st. You can see it on our CryptoFile page. It's CryptoFile 622. It's probably in the description. We also have a free Discord. You should join. It's totally free for now. And I plan to keep it that way until there's a legitimate reason not to. I'm looking for a rollover on the price action. Let's look at it to the downside. Here you can see these RSIs are curving down. So, we could come down here and then see a price rally that comes up, but only makes it to, 26.5. We could come down, break this low, and come up and do this. We could come up from our current level, put in a right shoulder, maybe just wick down and take out this low, and then put in a right shoulder. Maybe we get no right shoulder at all, but do we, like the bulls say, have a extremely bullish RSI? We do. What we don't have is we don't have any divergence at all. We don't have any divergence on the money flow. The money flow's getting deeper. So at the very least, we're going to need to consolidate some before we see a price pump. When I started posting now that it's not time to be looking for mega short trades. I'm in a short trade right now. But I'm not looking for a super trade like this was a super long trade, a very nice long trade. I am trading to the short side, and what I'm doing is waiting for price to, make its drops, and then re-entering on the retraces in areas that is likely to reverse. So I took a short trade here at this, 2700 area because we could come down and put another little blip in there. But I'm also looking for a rotation to the upside because these smaller time frames, this is, this here is probably the max momentum to the downside. This is the apex of this curve. Just like here, this is the apex of this curve. But was it the high in the price? No. You got divergence. So we could get 2-3 more ticks down while this momentum rolls over. It doesn't mean jack as far as what this is giving us an idea as to what the sentiment is. One thing we can do is we can take our money flow here, we can draw our trend line here, and we can see that this meets the zero line, which is pretty good timing line, about where you would expect a second wave to be put in with some divergence. And then get a price bump. I was looking to get one possibly from right here. I'm looking to get another price pump from right here. Wick down below this low. I attempted a long entry, but we're rejecting. Maybe we still flip and come up here. But I want you to know your environment. And once we come up here and we get, either some long consolidation or a push to the upside, I'm going to be heavily trading to the short side. And when you're trading to the short side in a downtrend, the moves will be hard and fast, and the uptrend will be very slow and lanky. When you're in an uptrend, it's the reverse. The moves are hard and fast, and you need to be trading in the direction of the market to even catch them. You're not going to catch this just on a whim. You're not going to catch this on a whim. You need to be trading in the direction of the market, pinpointing high probability areas for a reversal. So where should we expect a reversal for our next short now that we're shorting? Well, right here. The next spot would be right here at about 28.5, looking for reversal signals on our smaller time frame, going down to like the 4 hour, the hour. We've been streaming here for quite a while, so I'm just not going to get into all of it. But short term, we have the possibility of one more drop here and then a rotation to the upside. But we could rotate from the upside right here, and this is caution territory. We don't know if this is going to rotate up here right now or if we're going to take another drop and rotate down here. And everybody wants to short now that we had this big drop. The short entry was way back here. Now we've been downtrending for a month and a half. There's not one higher high since right here. And let's just see how many days it is. 45 days. Yeah, a month and a half. 43 days is exactly what it is. So, I mean, is price not due for some kind of a rise? It is. So just because this big God candle to the downside didn't just happen on a whim. It happened because of what's been going on back here. And I hope you've learned something from our TA here. Technical analysis is not the end-all, be-all. And you can use technical analysis and be directionally correct. You can pick high probability levels for a retrace. And you can get destroyed just the same. So, I mean, trading is not for everybody. It's certainly not for the faint of heart. It is certainly not a gambler's play field. And just showing you how, here we've taken the fib level, just the local, from the local high to the local low. Where is our golden pocket? The zone that price tends to retrace. Well, it's right here. So I mean, you could see price coming up, coming back and retesting. And let's just show it. Let's take this little price range we've made, go from the wick to the wick. Now let's start adding this on. If I can grab a hold of it. There we go. And where's our high? Right there. Brings us right up to the 618. Pull back down to the bottom and retest it. Maybe get one more up. How does price typically move according to Elliott? Not Elliott wave theory, but the guy who actually came up with, the basic concepts of Elliott wave. The rest of that junk has been an invention to sell books to fools, So let's go 1, come up here to the 618. That was a doubling of this range. How do big traders trade? They look at risk to reward. I'm going to, okay, as price breaks out here, and we come back up and we pull back and retest it. I want to buy this level. I want to have my stop loss down here so I don't lose money. I could start to work my way out of my position if we break back into this range, but my hard, fast stop loss should be down here. 2 to 1 would be right there. That's why you get these doublings. It's literally just that simple. It's the thought process that, drives the decision making. That is what shows up on this chart. So here's 2, and then if we go 3, it's going to be getting us right to the top of our our left shoulder, but not breaking our higher high. And if we went, oftentimes, everything in my life I apply biblical principles to. You don't have to be a Christian to acknowledge that there's many things that are taught in the Bible that manifest themselves in reality. One thing you see over and over again is time, and a half a time. So I mean that's 2.5. Usually by 2.5 repetitions, something has petered out or it's lost its savor. So let's go 1, 2. So 2 brings us to just above the 618. And then so let's bring up 3. 3 ranges brings us literally to our exact high. Now let's go time, and a half a time, would bring us to right here, which is about 29.5. you know. And really, to consider any kind of a reversal, we would have to break 30K, well, it's actually 30,200 to put in any kind of a higher high. See, the swing came down, we put in a higher high. So this swing ended, this swing, ended way down here. So now that prices dropped this far to get any type of a reversal, we've got a lot of price action to happen. But I hope it's been a help and a blessing to you. And I don't want to destroy your hopes and dreams, especially if you bought at 69K. Should you hold it all the way down to 4K? I'm going to say no. I wouldn't. I don't give financial advice. I just like to point out reality from an unbiased position that doesn't have financial incentive to, I'm not being paid by sponsors. I don't have a monetized YouTube channel. We don't charge a penny on our Discord as of now. If at some point in time, if there's 1,000 people in there, we're gonna have to weed people out by charging some type of a subscription fee or something. I don't sell signals. The people who make all this money in trading, why the hell do they need to make so much money telling you how to trade? It's retarded. It's ridiculous. I don't get my life's finance from trading, although I do trade, and quite successfully. But even then, you can be directionally correct, and trying to trade the market, you can get wrecked pretty easy. If you look at my crypto file, Trading View Ideas page, you will see there is tons of charts on there. You can press the play button from the date they were posted. You can read my conjecture below and what I was looking at. And you'll see there's tons of them that we hit time and price pretty accurately, just following basic methods. What the win rate is, I guess I don't really have an idea because I'm not really looking to win. I'm not even looking to be right. I'm just looking to be honest and give, an honest review of what is going on in price charts, to be just a very sensible voice of reason. And if there is some type of monetary gain that comes from presenting this information as the byproduct of just doing good work, good, honest work, well, hey, so be it. Maybe we'll consider some full-time stuff. But I just want to be a help and blessing to you, and I hope that that is what we have done here. And I hope that you've learned something about how markets move and what you can look for and what you can expect. We've been on here for quite a while. I'm going to cut it off. Hey, trade well.